What's up, everybody? Michael Silva here to do technical analysis on the DXY. This is the US dollar currency index. There's been a lot of talk recently about the dollar potentially collapsing, and I will say this month has been quite brutal. What we're going to do here is we're going to look at the monthly time frame, weekly time frame, and then the daily time frame to discuss the dollar's current price action and look for an area where this price actually might fall to. Let's go ahead and get into it. All right, welcome back. We are at the monthly time frame, and the reason why I'm looking at the monthly time frame right now is really just to give you a good sense of the overall chart, the context of the dollar index here. And as you can see, we have an upper trend line and then a lower trend line. This is just a downwards channel. It's a bearish type of channel. So the dollar does look like it's been losing value really ever since 2002. But I mean, that's not to say that down over here in 1985, it saw a huge pullback too. So it's been quite a wild ride over the years. And right now, as you can see, we have it kind of on its up run, and now we're having this pretty significant pullback at a very interesting time in the economy. As we already know, the Federal Reserve has came out and said that they're going to do whatever it takes by using all their tools in the toolbox to support the economy. So their balance sheet has been flying to the moon, which in turn can very well devalue the US currency. Now, there are people out there that believe that the dollar still has one big significant move before an ultimate crash. One of the theories that's very popular out there is called the dollar milkshake theory by Brent Johnson. And if you want to find out more about that dollar milkshake theory and why he believes that we're going to have a huge spike in demand with the dollar, I just recommend you going to Google or YouTube and searching Brent Johnson's dollar milkshake theory. He also has been discussing it on a lot of podcasts as well. Very good listen. On the monthly time frame, one pattern that I do want to point out is this head and shoulders with a diagonal neckline. As you can see, we have a left shoulder here, we have a head here, and then we also have the right shoulder. And the price as of just recently has broken through that trend line. Now, is this a complete breakdown? Well, for the monthly time frame, we needed to close below that neckline for confirmation on the monthly chart. We're going to hop into, like I said, the weekly and the daily to get a good sense too as well. As of right now, the price did just recently hit a 92 handle. Currently, it's trading at 92.99. So it's been quite some time. The last time was in June of 2018 when it was that low. So it's a 2-year low on the dollar index. Let's get into the weekly time frame. So we are here at the weekly time frame. You get a little bit better of a zoom in picture of this DXY, the dollar currency index. And as you can see, yes, it is a very clear head and shoulders pattern. Where can the price potentially pull back to? Well, just looking at this on the weekly time frame, this 87.50 level looks like it could be a very prominent area of support on this time frame. And the reason why, as you can see, it had resistance up here, 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 and then when it finally broke through, it did come back to test it as support right there. Now, it could technically be just a little bit higher, maybe like right here at 80, let's call it 88, because then it's matched up just a little bit better to these, and then also comes down from here. So 88 looks like an area of support on the weekly time frame to keep an eye on. When you look at the RSI indicator, there's been a couple of times that it came into oversold territories, and that's right here in 2018 of January. And as you can see, when it did become oversold, we did see a run up all the way up to a high of 102 just until recently the price did dip. What I find interesting here on that run up, we did see was a negative divergence take place. If we throw on a vertical line here on the chart, so I'll give you a better picture, what you can see is we had a low high here and then a higher high here, and then we had high here and then a lower high here. So that right there was a negative divergence in the RSI, resulting, not necessarily this is the reason why, but as you can see, there's been a pretty significant pullback now that broke recently through that trend line. But what I want to really point out now is going into the daily time frame to look at the RSI just to see what happened last time that it was really this low. All right, so we are here on the daily time frame, and as you see now, you can see a little bit more clear that we had the breakdown through the neckline. We had a retest right here at 93.67, and the price is currently trading at 92.99. Let's pay close attention to where the RSI is on the daily time frame. The RSI is at 1748. Now that is an extreme low on the RSI, basically saying that, hey, this index is very, very oversold. And when things become oversold, sometimes you can see significant bounces in the price of the stock or the index or whatever it is that you're looking at. To get a better sense of how low this actually is, let's look in the history of the chart to see when it last hit a low of this level. Okay, so I had to scroll back all the way till March 17th of 2008, where the last time the RSI printed a number this low. So what happened to the price of the dollar index shortly thereafter? Well, as you can see, just looking at this chart, it was on that trend line that we talked about on the monthly time frame. And from then it was off to the races. It took a while, about a year to get there, but it got as high as 88.05 towards the end of 2008. Now, if we scroll past that, what happened then shortly thereafter, we had the 2008 financial crisis. We saw that big pullback, and then once again, it continued to fall down and down. Now, during this time, that's when we did quantitative easing and we lowered interest rates. So yeah, there's been some very traumatic spikes within the dollar. As you can see, it hit a low in 2009 in December, and then it started ramping up again and then down. It's been a very, very choppy ride. The reason why I wanted to show you when it gets overextended like this is because chances are you might see some sort of a bounce. Now, this is showing a pretty dramatic bounce, which would feed the narrative of the dollar milkshake theory, where we see some huge run up in the dollar. But let's go back even further just to see the last time the RSI also hit this low. So we are here looking at a couple different times it hit this low. So we have 2007, July 24th. And as you can see, when it hit this low, we did see a bounce up in the price. But what happened after was a big significant pullback. And then over here in April of 2006, it actually hit even lower in the RSI, printing about 1608. And as you see, we saw a run up, but ultimately the price did just head lower and lower. Now, on the monthly time frame and the weekly time frame, the RSI is actually not oversold at this particular time. And when we look at the daily, the monthly, and the weekly, this pattern here is very bearish. Breaking this neckline would suggest that there is going to be another leg lower in the dollar. The only thing that I believe that can make it run up a little bit at this particular time is being so oversold on this indicator. So what we might potentially see is a pullback, but we might see some sort of dead cat bounce and then continuation to the downside. My ultimate target on the dollar, let's go ahead and go to the weekly time frame to map that out. So the target that I'm really keen in on is 88. I think that the price can pull back that dramatically, but the price that we might see some sort of bounce from is this 92.50 level right here. And the reason why I say that is just by looking at the history of the chart, you can see that it struggled to break above that level before and then back tested it. And as you can see, it pulled down through it, acted as a resistance. And we also have some pretty significant pullbacks to this level here, to here, a couple of times. So there's been a lot of price history right here, right here. And then obviously it acts as resistance right there. So we have a lot of different data points at this 92.50 level, which would indicate, hey, if we can't crack below that, we might see some sort of dead cat bounce, because ultimately there is a lot of pressure moving downwards and we have a pattern that is breaking to the downside. Now we have one more day left in this trading week. So if the price remains down here and closes below this neckline, that would feed the more bearish narrative on this dollar index. All right, everybody, that's all I have for you on the technical analysis video on the US dollar currency index. This is the DXY once again that we were looking at. Have a great day. See you later. Bye.